The U.S. Federal Reserve's FOMC meeting is about to make waves, and those ripples will likely reach Seoul. Will the Fed cut rates this time? And if it does, how will Korean markets, the won, KRW, and foreign investment flows respond? Stay with me, I'll break it all down for you. 1. What is the FOMC and why it matters? First, a quick primer. The FOMC, Federal Open Market Committee, is the U.S. central bank's policymaking body, the group that sets the federal funds rate and guides monetary policy. Their decisions influence global interest rates, capital flows, currency valuations, and Asia, including Korea, feels the impact through trade, foreign investment, and money flows. 2. What's happening now, the setup. Here's what's on the line in the current FOMC cycle. Analysts and economists are largely expecting a 25 basis point (BPS) rate cut later today. The Fed cut last meeting, and now market participants are watching for momentum. Will they repeat the dovish stance? The backdrop is a bit messy. Inflation remains sticky in the US, but there are signs of cooling pressure. Meanwhile, the US dollar (USD) has been relatively strong as markets anticipate the Fed move. So the Fed faces a balancing act: how much to ease without stoking inflation anew. 3. Implications for Korea and Asia. Now here's the part that matters most to you in Korea: capital flows and foreign investment. A US rate cut often weakens the dollar and encourages capital to seek higher yield in places like Asia, which may benefit Korean equities and bonds. Korean bonds and interest rates. If global yields drop, Korean government and corporate borrowing costs can soften. That might ease pressure on Korean rates or prompt BOJ/BOJ style moves. Currency, KRW reactions. A weaker USD could support the Korean won. But if expectations overshoot, volatility could spike, especially if foreign investors pull portfolios. Export and trade channel. Korea's export sector is sensitive to global demand and USD exchange rates. Cheaper USD equals weaker competitiveness for US imports, but if US growth slows, demand for Korean exports might decline. Tech and semiconductors exposure. Korea is a key hub for semiconductor production. Changes in global interest and capital cost impact capex, investment in fabs, and electronics/chip demand. So for Korean investors and companies, watching the FOMC isn't just international finance, it's locals' financial pulse. 4. Scenarios and what to watch. Let's run through possible scenarios, and which signals to monitor. Scenario A 25 BPS cut plus dovish tone. US rates soften, USD weakens, capital flows tilt to Asia, lifting equities and yields in Korea. KRW strengthens Korean bond yield compression. Scenario B, no cut/hawkish surprise. USD holds or strengthens, capital may flee to US. KRW may weaken, pressure on stocks/bonds. Signals to watch. Fed's dot plot and forward guidance. Will they hint at further cuts in 2025? Powell's press conference tone, dovish versus cautious. US macro data, inflation, jobs in days ahead, currency moves, USD/KRW, USD/CNY, emerging markets, global flows/ETF, capital movement, Asia inflows/outflows, bond yield curves, US 2 to 10 years curve, Asia bond yields. If the Fed shifts to dovish, it could tilt the next 1 to 3 months bullish for Korea. But if they lean hawkish, the pressure could reverse quickly. Summary and call to action. So here's the bottom line: the upcoming FOMC decision is more than just a US story. For Korea, it could influence capital flows, rates, the won, and trade/export dynamics. Stay alert to Fed signals, Powell's tone, and how global investors respond. If you found this useful, hit like, subscribe to Amexel Smart and Green Wealth for economics and finance updates in Korea and global markets, and comment. Do you expect the Fed to cut today, and will that be good or bad for the Korean market? I'll break it down next time.